Ladies and gentlemen, K-Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down a little bit here on the S&P. As you can see, it's down 0.5%, and pretty much across the board, we're down about 0.5%, little high, little low. I think the only thing green today is Russell 2000. Everything else is down slightly. So let's figure out what happened today in the trading sessions today, and see what we can see if we can figure out what we can expect going into tomorrow and possibly remainder of this week. So it looks like we actually saw a gap down here, and it looks like, let's see how much of a gap down that was. That was actually about 0.7% gap down. That's a decent sized gap down, right? Right at open, and it looks like we gap down, and then price continued to come down further to the downside. And I remember on the last night's daily update analysis, what I talked about is that if the bears just come down and fill the gap, which it did, there's a gap here, right? This gap was open yesterday, open, right? So we talked about yesterday, if the bears come down, fill the gap, it's gonna act as support, right? And we talked about how it would have been better if the bears come down and then gap it down, but because we gapped down from here, so we gapped it down, and then bears continue to push. But unfortunately, there was a gap area, and gap area is going to act as support. This is why gaps are important to track, because many times when the gaps are filled, it's going to act as either resistance or support. This time, it acted as support because this is an up gap, and then price came back down. And you can see that long lower wick here. So we saw the hammer candle on the first hour, right? And then on the second hour, we saw follow through, and then we saw third hour, we saw a little bit of continuation. Here's something interesting happened though. When we saw a big gap down, right? Bears came down and filled this gap, which is an up gap, and then bulls trying to get up, filled this gap, was not able to fill that down gap, right? A lot of people don't understand how the gap works many times. So basically what happened was this is where it closed, and this is where it opened. So there's just actually a gap there. You might not see it, not like this one. I mean, definitely you can see the gap here because there's nothing there. So sometimes I think people people comment to me on social media that I don't see any gap. If you go 5-minute chart or something like that, you're probably gonna see it. So when I'm looking at 65-minute chart, since each candle represents 65-minute worth of data, so you're not gonna see it. That's where it closed last night. That's where it opened. So there's a gap from here to here. Anyway, so that's a third hour. Buyers attempted to fill the gap. I tweeted out earlier today, it will be better for the bulls if they fill the gap, the entirety of it. Well, they failed to fill it. Fourth hour tried, failed. Fifth hour tried, not able to go all the way up. And that's kind of what happened. Bulls kind of got tired here on the fifth and sixth hour. So you see on the sixth hour, bulls couldn't push anymore, and then they gave up, and then price did come all the way back down to the 360 pivot / support. And then you can see that how price got back above my short-term moving, that squiggly line there, right? So that short-term moving average is holding up actually. So you can see if I zoom out just a little bit, looking at my short-term moving average right there, you see this squiggly moving average, that light bluish. So that had been acting as resistance here. It flipped bullish here on the 13th of November. And then you can see how this kind of goes up, right? And then when we saw a gap down, so not only we had the gap here that acted as support, coinciding with the micro term support, and my short-term moving average, it is no coincidence on the first hour we closed above 360, which is a micro-term pivot, and then above my short-term moving average. And then you can see how bulls trying to fill that gap, failed to fill this gap. And so 6th hour, bulls got tired, bear took advantage, came down, and then bulls were able to push it up again above my short-term moving average. So you can see short-term moving average support, short-term moving average support, short-term moving average support. So here's kind of what we can talk about when it comes to like a short-term, like actually micro-term, right? Micro-term, short-term, we want to give benefit of the doubt to the buyers in the short term. But I think in the micro term, and when I say micro term, I mean just last 2 days. I think last 2 days price is more of a sideways move. So I think micro term, just looking at last 2 days, we should give benefit of the doubt to a little bit more to the bearish side in the micro term, just looking at last 2 days, just because this gap was not filled and the price been moving sideways. But in the short term, which looking at this right here, right, just looking at last couple weeks or so, week or two, we want to give benefit of the doubt to the buyers in the short term because we do have price cultivating higher highs here and higher lows, and as of today, market is trading above and closed above my short-term moving average, right? That gap, down gap that hasn't filled today, that's gonna make things a little bit hectic. So sentiment is bullish in the short term, right? But there's a little bit of hecticness. Bulls have to figure it out as quickly as possible. If not, if this gap doesn't get filled right away or bulls cannot gap it up, best case scenario for the buyers is just gapping up over it tomorrow or sometime. It's very much doable. It's only 0.5, 0.6% gap up. That would be the best case scenario. Things will be much, much smoother for the bulls if they can just gap it up. Because you know what's going to happen is if this gap gets filled, it's going to act as resistance. It might come back, retest my short-term moving average, and things can get, when I say hectic, that doesn't mean bearish. Hectic means it can get sideways. I mean, it could be bearish, but hectic means it's not going to be smooth going forward. And that's kind of what happened when we saw that gap down. Things weren't so smooth throughout the day today. So let's actually go to a midterm, right? And then trying to figure out the midterm sense. Obviously for bears, what you want to do is you're going to keep this down gap alive. You need to get below my short-term moving average and close below it because my short-term moving average is rising. And when my short-term moving averages start to rise, there will be times where it's going to look bearish, but you'll be surprised how quickly sentiment can change in short to micro term. Like you see, this is where my short-term moving average started rising. This is where a short-term moving average found support with that price. This is where a short-term moving average here again, it looked like it's pulling back, boom. Here's another one, you look like pulling back, boom. Here's another one, look like it's pulling back, boom, right? So it doesn't mean that's exactly what's going to happen is with the data that is at hand today, when we see my short-term moving average is rising and price is staying above it, we do want to give benefit of the doubt to the buyers. Things can change tomorrow, but today we want to give benefit of the doubt to the bulls. But bears, obviously, you want to break below. So obviously, I think 358, probably you want to get below this level because that's a strong support right here. That's that neckline. So you got to break below 357 and then come down, fill this gap right here. There's a gap right here at 355. Not to mention, though, we got the rising pivot. That's a pretty solid support, solid rising pivot, right? And then that's a double support because we got a gap area there and coinciding with the rising pivot. So if we do see price coming back down to like, let's say 355 or 353, I think it's going to act as pretty solid support and we're probably going to see initial bounce there. So let's go to midterm. So midterm is where we're going to see more of a bigger picture. You're going all the way back to September, right? We're looking at September, October, November, 3 months of price action right here. And this is a midterm. So now, You can see this is important pivot, obviously, right there, because that's the level where we see that that important swing high, right? This swing high right there, right? If bears wanted to make this into a topping pattern, they should make sure price never gotten above this high, because now we can identify as higher high, right? So we're no longer in a downtrend. We're no longer in some kind of a topping pattern. We're in the process, in the part of uptrend in the midterm because of this higher high. We never cultivated lower low. We've been talking about this entire month of October and November, that we never cultivated lower low. And with that, and the market basically making, equal lows here, and then making kind of like a higher highs here. You can see here, that's a higher high, and that's high, that's another higher high. So in the midterm sense, we want to give benefit of the doubt to the buyers. So basically right now at this point, we are obviously the market sentiment is bullish in the long term, bullish in the midterm, bullish in the short term. But in the micro to short term, there's a little bit of tension here, just in the last couple days that could turn into a little bit of, shenanigan, maybe to the downside, potentially come back down to 355. So how you should approach this market is understand that, okay, market might be slowing down a little bit here. We may come back down to 355. But overall, we want to be bullish, and we may never come down either. And we'll know more about it tomorrow. But this is kind of the level where, buyers, because the trend is up. If buyers decided they're going to gap it up, they can certainly do that, right? So if you look at things in more of a short to midterm, you want to be bullish, but you're looking at like a really micro term, what's going to happen tomorrow, maybe, tomorrow and next day. As long as this gap doesn't get filled, there's a little down gap, there might be some sideways, there might be some shenanigans. That's how you should approach this market. Let's look at the oscillator here real quick. So the oscillator is curling back. We're not seeing the oscillator actually, we didn't see any kind of cross up to the upside. We're actually finding resistance here. We didn't go all the way back up. We're finding resistance right in this vicinity, pulling back here. So we are curling down at this point, but what we're trying to figure out is this curling down going to look like this one? Because you can see how price kind of started moving sideways while the oscillator pulling back. And we did the same thing right here. Oscillator pulled back, but price kind of moved sideways, right? So that's kind of the thing, is that at this point, we do see the oscillator curling back, telling us that buyers are potentially getting tired at this point. But are the buyers letting this oscillator reset so they can gain that energy back while the price potentially move sideways? And price could come down a little bit, maybe 355 or something like that, and maybe we start consolidating here at the top of this level here, 355, 350. 360-ish area, maybe even retest a rising pivot, and then you see this oscillator coming down somewhere, maybe even maybe you want to hit that support, or maybe come down to this level and then come back up or something like that. So what happens is, a lot of times when you kind of get into that uptrend like we've seen here, you will get to a certain level, and then oscillator pull back, and then the price will move sideways, and then buyers will gain energy to get back up again. And that's kind of what we saw here. And then in that process, you see that how my oscillator for like a month or so in October, pretty much about half month in October, oscillator never came back down the bottom of his band. He hung out at the top. Once the oscillator kind of hangs out, elevated like that, you expect the price to make a move to the upside. Right now, we're in a kind of a different fashion, but you see how it looks like that? Like you see that higher lows here and that support holding, and that's kind of where we're at right now. You see that oscillator is holding that support, and we're kind of in that elevated state, right? We're not oscillating back and forth, meaning oscillator is not going up, up, down, up, down, up, down, right? They're elevated, they're staying up here. So this is a time where when you look at this oscillator, you don't say, okay, it's pulling back, that must be bearish. No, so you have to understand not only where the oscillator is, you have to understand where the market is as overall. You can see here, right, when the market was coming down, you see how this oscillator does not go all the way back up to the top of its band, but it starts oscillating back and forth what? At the bottom of its band, and then you see how much we saw steep correction there. Now we're kind of doing the opposite of it. We're elevated at the top of its band. Now we're coming down, but how you see how here, this thing never came back down to the bottom of its band, but it stopped short and then got right back up. That tells us that we're on an overall uptrend, which we've established that fact just looking in the short term and midterm perspective, right? So here's my total complete recap. Conclusion is bullish obviously in the market, but tomorrow things can get shaky still. Tomorrow, maybe even Thursday, unless bulls can gap it up above this little gap there. Unless bulls can gap it up above the little gap like 362 or something like that. Unless we do that, theirs could be a little bit shaky, a little bit of downturn, nothing crazy. The worst case scenario that I can see for tomorrow will be maybe, you know, if bears really trying to bring it down, is potentially next couple days, maybe 355 or something like that. But, you know, we'll see how the market plays out tomorrow. We'll go from there. Enjoy your evening, and I'll come back for you tomorrow night. Good luck trading tomorrow.